The release of DeepSeek AI from a Chinese company should be a wake-up call.
Chinese AI just dunked on Silicon Valley so hard the market cap of NVIDIA lost the equivalent of the entire GDP of Sweden.
It's fine, it's Sweden.
Yes, as we've all heard, China spent peanuts to build what cost American companies hundreds of millions of dollars. The markets went into panic mode and US tech stocks got wrecked. But is it so over for American dominance of AI now? Is OpenAI cooked? What about NVIDIA? How did China do it? And why are my altcoins down too? Well, we know you have a lot of questions. So, my name is Guy, and stick around as we unpack them and figure out what China's DeepSeek means for AI, geopolitics, and crypto. But first, a refresher on how we arrived at the present moment in AI. If you already know your stuff, well, we've timestamped this video just for you so you can skip ahead. Now, for as long as we've had computers, people have been dreaming of AI. Neural networks were conceived way back in the 1940s as a way to mimic the human brain's pattern recognition. They paved the way for deep learning, whereby computers learn to extract answers from data much like our own brains do. Of course, back then we didn't have hardware powerful enough to do any such thing. And the rest of the 20th century was a story of computers catching up to our big ideas. They became smaller, cheaper, and vastly more powerful. But funnily enough, in the end, it was the advent of 3D video games that got us over the line. You see, in the 1990s, demand for 3D video game graphics brought about the invention of the Graphics Processing Unit, or GPU, specialized hardware designed to handle parallel computations efficiently. Little did anyone know at the time that GPUs would become the backbone of modern AI. In the early 2000s, it became apparent that parallel processing had use cases far beyond rendering 3D banana peels in Mario Kart. As it happens, AI algorithms, particularly those used in deep learning, rely heavily on the same parallelizable operations that GPUs were built for. By the late 2010s, breakthroughs in deep learning, architecture, and natural language processing made possible the first large language models, or LLMs. In particular, Google's invention of transformer architecture and its pioneering BERT LLM in 2017 paved the way for the generative AI that we've all become so familiar with. Soon, ever more performant LLMs started proliferating, demonstrating remarkable abilities in coherent and contextually relevant text generation. But it wasn't until OpenAI had the bright idea of turning a GPT model into a public-facing product that the world took notice. The launch of ChatGPT in November 2022 changed everything. AI quickly took on a new strategic importance in geopolitics, and OpenAI became the poster child for American leadership in the field. Less than 3 years on, OpenAI's latest funding round has the startup valued at around $340 billion. Investment continues to pour in 10 figures at a time, and OpenAI has monetized access to its flagship models with a $200 per month subscription service. The US government, seeing America's lead in AI as a matter of vital importance, has sought to strangle China's ability to compete in AI by cutting off its supply of high-performance NVIDIA GPUs, the picks and shovels of the AI gold rush. President Trump picked up where President Biden left off, making a point of hailing a new joint venture between OpenAI, Oracle, and Japan's SoftBank shortly after his inauguration. The venture entails up to $500 billion of spending on infrastructure, namely data centers and electricity generation, needed to maintain America's edge in the race to scale AI. And herein lies a certain vulnerability. In the headlines, OpenAI is always seen adjacent to one eye-watering sum of money or another, whether it's a new raise, valuation, or capital expenditure. One thing you never see, though, is profit, because OpenAI is still burning through cash and treading water. Now, this alone is not a gotcha moment, because it's typical for startups to not be profitable in their formative years. But OpenAI's unique ability to raise and burn seemingly unlimited sums of money now looks like a double-edged sword. Capital has replaced innovation, as OpenAI's biggest moat. And within the confines of the game that OpenAI pioneered, that is exactly what is needed. The game is simple. You just need more of everything. More compute power in the form of more GPUs, more energy to power and data centers to house them, and more data to train your models on. There are no shortcuts, only an unquenchable thirst for dollars, data, and electricity to satisfy. It's blunt and extremely resource intensive, and Silicon Valley had all of us persuaded that it was the only way. That is, until DeepSeek came along and upstaged the lot of them, apparently on a shoestring budget and using pretty flimsy GPUs. Turns out that hyperscaling through brute force isn't the only way to build AI. So then, let's talk about DeepSeek. It began life as a pet project of Lang Wenfeng, co-founder of Chinese quant hedge fund Highflyer. After spending 7 years using AI-powered trading algorithms to slay the markets and build a $14 billion portfolio, he decided to go all in on AGI research. According to a 2023 post from Highflyer's official WeChat account, quote, Highflyer will concentrate its resources and strength, wholly devote itself to serve AI technology that benefits all of humanity, create a new independent research group, and explore the essence of AGI, the company said. Now, this research group became DeepSeek, although it's not clear what Highflyer meant by independent, as DeepSeek is 100% funded by the hedge fund. Now, this is a totally different funding model to the startups of Silicon Valley, where external venture capital is the lifeblood of every startup. It put DeepSeek at liberty to pursue long-term research goals without the pressure of having to deliver quick commercial returns to grease VC exits. And this ethos is spelled out in the tagline of DeepSeek's website, which reads, quote, Unravel the mystery of AGI with curiosity. Answer the essential question with long-termism. And Lang does appear to be playing the long game, as he had personally accumulated around 10,000 NVIDIA GPUs by 2021, a collection he described as driven by curiosity rather than business logic. Well, it proved to be a serendipitous stockpile, though, as the US banned exports of powerful GPUs to China in 2022. By 2024, Lang's GPUs were out of date and not fit to compete with the likes of OpenAI, Meta, and Google, who gatekeep the frontier of AI with massive data centers full of the latest NVIDIA GPUs. But this disadvantage was ultimately how Lang and the gang shocked the world with the 20th of January unveiling of the flagship DeepSeek R1 model. Like OpenAI's flagship model O1, DeepSeek R1 is a reasoning model built on top of an underlying large language model dubbed V3. Now, V3 was trained for 55 days using approximately 2,000 of NVIDIA's less powerful H800 GPUs at a cost of around $5.6 million. By comparison, OpenAI's O1 was built atop the GPT-4 large language model. According to GPT-4, it costs somewhere between $100 million and several $100 million to train. Now, you'd think that a model that cost at least $100 million to train on the world's most powerful arsenal of GPUs would be incomparably superior to one trained on toy GPUs for $5.6 million. But this wasn't the case. By almost every metric, R1 is as performant as or superior to O1. This is not a very good look for OpenAI, especially since its models are closed source, whereas DeepSeek's is open source. To put it bluntly, DeepSeek just dumped a miraculous leap forward in AI on the internet for anyone to use and modify however they please, completely for free, whereas OpenAI is closely guarding inferior architecture behind a $200 per month paywall. However, there has been some skepticism about DeepSeek's resource limitations, or at least their framing. For example, the $5.6 million headline figure is impressive by any measure, but it has been presented misleadingly in the news media. The attention given to this number could leave you with the impression that DeepSeek accomplished for basically peanuts what Silicon Valley had spent billions to do. For example, A passage in The Guardian read, quote, "The upset has come from DeepSeek's claim that it trained an AI model on a par with OpenAI's ChatGPT with less than $6 million. For comparison, Microsoft, OpenAI's primary partner, plans to invest around $80 billion in AI infrastructure this year." Now, this looks like a willful misunderstanding intended to dunk on Silicon Valley. That $5.6 million was the cost of a single step in the process of building DeepSeek's LLM, and there's no reason to compare it with infrastructure spending. They're apples and oranges. But even the timing of DeepSeek's R1 rollout had the same effect. R1 was unveiled the day before President Trump trotted out Sam Altman and SoftBank CEO Masayoshi Son at the White House to hail their planned $500 billion investment in AI infrastructure in the United States. The announcement was widely interpreted as a move to counter China's advances in AI, but it was quickly overshadowed by DeepSeek. Trump's touting of the $500 billion investment made for an irresistible juxtaposition with DeepSeek's $5.6 million spending on training, as if to say, what, the US is burning hundreds of billions of dollars and draining the national power grid to build something China made for peanuts and dumped online for free? Well, that's embarrassing. It's worth repeating that such comparisons are unjustified and betray either a poor understanding or bad faith. You don't need to invoke hundreds of billions of dollars in infrastructure investments to get the point across. You can just say that GPT-4 cost at least $100 million to train, whereas V3 cost $5.6 million. This fact has the same effect without overstating it. Another critique, meanwhile, relates to the compute resources used by DeepSeek. Scale AI CEO Alexander Wang claimed on CNBC that DeepSeek owns 50,000 state-of-the-art NVIDIA Hopper GPUs, which it can't disclose because to do so would be to acknowledge a violation of Washington's export ban. Disclosure could cause trouble for anyone the Americans can get their hands on who was allegedly involved in getting those hoppers into China, and this would not be in DeepSeek's interest. Elon Musk responded to Wang's claim on X, quote, "Obviously," although neither Wang nor Musk have provided any evidence or sources. But it's kind of a moot point anyway. That's because the release of R1 was accompanied by a technical paper spelling out exactly how DeepSeek accomplished its results, with resources far inferior to those controlled by Silicon Valley's tech giants. There doesn't seem to be any doubt about the content of this paper, which was by all accounts very well received by the global AI community for its actionable insights. Last July, Lang told Chinese media that there were no plans for a DeepSeek IPO because, quote, "The problem we face has never been money, but the embargo on high-end chips," which of course begs the question of what DeepSeek would be able to accomplish with resources on par with its Silicon Valley counterparts. The flip side of this question is where all of this leaves said counterparts. Just 2 years ago, Sam Altman told an audience of VCs that, quote, "There is no hope to compete with us on training foundation models. But, as the saying goes, necessity is the mother of invention." While OpenAI was busy collecting VC checks, DeepSeek was forced by the US export ban to come up with new ideas. In the short term, DeepSeek wiped $1 trillion in market cap off of the US stock market. It's a good thing that OpenAI is not a publicly traded company, because that could have been really ugly. The stock worst affected was NVIDIA's, whose market cap took a $593 billion haircut, roughly equivalent to Sweden's annual GDP, as investors considered the implications of DeepSeek's accomplishments on NVIDIA's hardware monopoly. As the markets digested the news, tech stocks recovered, though, to a significant extent. The day after eating the biggest daily loss in history, NVIDIA's market cap regained $260 billion, the second biggest daily gain on record. Meanwhile, attention was drawn to outperformance by Meta, the company responsible for the previously leading open-source AI model, Llama. In the medium to long term, the DeepSeek moment is likely to be remembered as a big win for open-source AI, rather than as a victory or loss for any specific company. The exception, however, is OpenAI, who, as the leading developer of closed-source AI, now looks a little bit silly. Sam Altman has since publicly stated that OpenAI's decision not to open-source its AI has placed the company on the wrong side of history. This is perhaps DeepSeek's greatest accomplishment, assuming Sam's words become actions, that is. All the grumbling about how much they spent on training or what GPUs they had or which other companies' models they benefited from will be forgotten soon enough. What will be remembered, though, is DeepSeek's technical breakthroughs, which were made publicly available for free for the benefit of all people everywhere, including residents of Silicon Valley. The so-called hyperscalers will now be able to benefit from the efficiency breakthroughs introduced by DeepSeek. This is likely to alleviate some of the tension built up on supply chains in the race to secure the most GPUs and electricity and build the biggest data centers. It's now clear that the era of intensive pre-training of foundation models like GPT-4, where vast resources are being expended on diminishing returns, will come to an end sooner rather than later. The pre-trained models will be integrated into more applications and products and run locally, say on a smartphone, rather than on a remote server. They will continue to grow, learn, and enhance, but by interacting with their users and their digital and physical environments, rather than by further training in the cloud, in a process known as inference. Now, AI for self-driving is a good illustration of what inference means. The AI runs in-vehicle, learning about its physical environment and self-improving without input from the company who pre-trained the model. As pre-training becomes less central to AI advancement, the question for Silicon Valley is what is it going to do with the enormous infrastructure that is being built for this purpose? Data centers represent vast amounts of valuable compute power, so it shouldn't be too difficult to find a monetizable and worthwhile use for these resources. NVIDIA is likely to continue dominating, and any reduction in demand for its most powerful hardware used for pre-training may be replaced by new demand for its more affordable offerings, which will be more appropriate for inference. Sam Altman and Microsoft CEO Satya Nadella have praised DeepSeek's breakthrough as impressive and a wake-up call, a sentiment even echoed by President Trump.
It should be a wake-up call for our industries that we need to be laser-focused on.
Previous assumptions about China being years behind the US in AI development and chronically inclined to copy and steal American intellectual property rather than conduct original research and innovate have been exposed as naked propaganda and hubris. While the dust is still settling from the DeepSeek drama, it's not yet clear if or how America's AI strategy will change in response to the newfound competition. At the very least, we can conclude the US export ban, which sought to handicap China, has not succeeded, and underestimating China is not a good idea. Now, all of this is very interesting, but the real question is, of course, what does any of this stuff mean for crypto? The crash in US tech stocks was so violent that it brought crypto down with it, despite there being no apparent relationship between DeepSeek and crypto. As with every macroeconomic shock to financial markets, crypto was hit because of its correlation to TradFi. Whenever there's a general shock to financial markets, BTC dumps, and when BTC dumps, the rest of the crypto market inevitably tanks even harder. That said, apart from the knee-jerk market reaction, DeepSeek should be good news for AI crypto projects which can now try to incorporate it into their tech stacks. And you don't have to look too far for instances of this already happening. For example, Deepin project Nillion subsequently integrated the DeepSeek R114B model into its privacy-enhancing computational network. Coinbureau is invested in Nillion, by the way. Then there's Venice AI, a privacy-enhancing and censorship-resistant ChatGPT alternative, which is now offering its users censorship-free access to DeepSeek's most powerful and biggest model, R1671B. As DeepSeek is now open source, it's also inevitable that AI agents in crypto are going to start leveraging R1 to further enhance their shitposting, on-chain analysis, and, well, whatever else the market deems necessary. Now, the arrival of DeepSeek was likened by some to a Sputnik moment, which refers to a shocking revelation that a foreign power can compete with the United States on a matter of great strategic importance. Well, you have to think pretty little of China, though, to be shocked that it could contribute so significantly to the advancement of AI. We think the real takeaway here is the big boost for open source over closed source AI in general. DeepSeek has also accelerated the time horizon for pre-training to give way to inference as the main vector of AI advancement. US tech giants will have to think carefully about the meaning and use of the vast infrastructure investments that they are already committed to. Their share prices are going to survive, but OpenAI may suffer a bit of an identity crisis. At the time of making this video, crypto is getting hammered for unrelated reasons, but if you're bullish on AI cryptos, you may want to keep your eyes peeled for any projects integrating DeepSeek because, if nothing else, it makes for good marketing in this attention-driven sector of ours. And if you have a hotter take about what DeepSeek means for AI, geopolitics, and the markets, then please do let rip in the comments below. If you got something out of this video, go ahead and drop us a like, and while you're at it, make sure you're subscribed and have your bell notifications switched on so you'll catch our next upload before anyone else. And you can check out our latest video over here if you're looking for what to watch next. As always, thank you for watching, and I'll see you next time. This is Guy, over and out.